Welcome to Trade Pro. In this video I'm going to be teaching you this very simple parabolic SAR, Heikin candlestick, and 200 EMA trading strategy that is highly profitable. It's been proven over many trades, and I'm going to make another video following this one showing this strategy backtested 100 times and then another backtesting the strategy 200 times so you can truly see the win rate and see how profitable it is. But in this video, I'm just going to show you the strategy and so you can start using it right away. So let me explain the strategy. First of all, you're going to pop up your 200 EMA, your parabolic SAR indicator, and switch your candlesticks to Heikin. Then you're going to be looking for only short sell setups when the price is below the 200 EMA and only buys or longs when above the 200 EMA. So let's show you an example and show you where you can place your stop loss. So we're looking, price has just gone below the 200 EMA. So our first sell setup has been spotted. We get a flip to a red candle, but we cannot enter yet because there's a wick above the Heikin. This one is the entry candle, because you don't have a wick. When there's a wick above on a downtrend, you cannot take the entry. So let's take our entry on this candle close. We're going to set the stop loss above the parabolic SAR and then aim for a 2.5 RR. So every trade you win, you make 2.5. Every trade you lose 1. So this one would have been a nice winner on the short trade. So that is a good example of a short. And now let's find a buy setup. So actually this right here would be a buy setup. There's no wick below. And the parabolic SAR is below here, plus price is above the 200 EMA. So we're going to take this buy setup here. You're going to wait till the candle closes. You're going to set your stop loss just below the parabolic SAR, and then you're going to aim for a 2.5. So this would have been a nice winner as well. Now let me explain also why this one over here is not the entry, but this one is. This one here would not be the entry, even though there's no wick below the candle, because simply the parabolic SAR indicator is still on top. There's nowhere to set your stop loss. So this filters bad entries. And along with the 200 EMA is also another way to filter bad entries since you're going with the trend. So you have multiple ways to filter bad entries having the parabolic SAR and the 200 EMA. So a lot of the false signals that you may get using certain indicators on their own, this filters a lot of those bad entries out. So you would have gotten this whole uptrend, and then if you exited up here, you could also take another long entry right here. So we get parabolic SAR flips to the top, we get some red candles, then we see the flip to the green, but we're waiting for both the parabolic SAR to be underneath and to have no wick. So this would be our entry candle right here. No wick below the candle, plus our parabolic SAR is now below, so we can set a stop loss properly. So we're going to enter here. Stop just below the parabolic SAR, and then we're aiming for a 2.5. So this would have been, once again, a nice winner in this uptrend. So that is the basics of that strategy. One thing that I will say also is you don't want to be taking entries like on this second round or this round right here. If you've seen that this parabolic SAR has been underneath for a very long time without flipping to the top, you only want to take the first entries that are generated in the first few dots of the parabolic SAR. So don't take entry signals that are way over here on the parabolic SAR once it has been on this uptrend for a long period of time because you'll likely be buying the top before a swift drop off. So for this, let's see, you wouldn't be buying into this one, but you could buy right here. This would be the only one that you could buy, and then any of this you're not going to be buying. Even though that would have been a loss, it still would be a trade that you would take because you wouldn't know it was going to be a loser when entering. But over the course of many trades, this strategy is highly profitable. And I will show you in the next video backtesting this strategy 100 times, as well as a video showing 200 times tested to show you exactly how much you'll make over the course of many trades, and the true win rate. And also, very important, how many losses you should expect to have in a row, or how many wins you can expect to have in a row at a max. So you don't want to lose 3 or 4 trades in a row and then think the strategy is not working when maybe you'll win 8 in a row right after that. So let me do that in this next video, but I just wanted to show the simple strategy. I'm on a 5-minute chart on Euro USD right now, but it works just fine on multiple time frames and on many pairs. I've only tested it on Forex, so I cannot vouch for having test results for cryptocurrencies or for stocks or other asset classes. But anyway, thanks for watching, and hope you try this strategy out because it's been doing very well for me. But have a nice day. Don't forget to subscribe.